Hello and welcome to the CEO at BT series. I'm Sakshi Batra. Here we bring you up close and personal conversations with the creme de la creme of India's C-suite to fetch you pertinent industry insights and personal anecdotes. Today, Business Today's editor Saurabh Majumdar and managing editor Anand Adhikari are in conversation with KV Kamath, chairman of the National Bank for Financing Infrastructure and Development, and also the non-executive chairman of Geo Financial Services. The subject matter of discussion is building financial resilience in turbulent times for the G20. India has assumed the G20 presidency at a time when the world is facing multiple challenges. US recession, Russia-Ukraine war, the US-China tensions. In fact, the India-China relations are also not the best. There is high inflation and there are also high interest rates globally. Let's hear from Mr. Kamath.
Welcome to the show, Mr. Kamath. As we start off into this whole peak period of India's G20 presidency, I want to ask you to start off for this show about what are your thoughts in terms of India's ability to drive the G20 agenda, make a key difference across multiple areas, in particular the area of financial stability as various economies across the world face a crisis period. We all know it's a global, challenging period globally. India has shown the way in many areas. What are the areas you think India can play a central role?
Yeah, I think we are at a very interesting point in time in, I would say, economic history also. And within that context, India has, done exceptionally well. And in doing exceptionally well, I think there are certain, I would say, messages or learnings that India could share with the world. I think that's what's happened. And that is what is, I think, elevating India's presidency to a new level. Just to put it in context. So, as I was saying, given the last 3.5 years experience, there are learnings from India, the way the economy was managed. So, the twin efforts of the central government and the central bank in managing it. What has happened in the West in terms of inflation fighting or not able to fight inflation, interest rates going out of control, and then the whole crisis is still, in a way, the financial crisis is not fully addressed. So I was hypothesizing that the old theory that used to be told to us that if there's inflation, raise interest rates, and we used to be held accountable if we did not, I think is now completely changed. And the West doesn't want to behave in that way. There are consequences. So I would think that a new approach to handling a financial crisis will need to evolve from the way the missteps that were taken in the West and probably the good steps that were taken in India, and something which is could work for the future would need to be laid out. I could believe that this will be a great learning that will come out of the G20 process as to how India managed its challenges and how we are on the path to growth much earlier than others, and how we could share our learnings in this context, in a wider context.
But Mr. Kamath, sorry to interject, there is one question here where many economies, if you notice, are becoming inward looking because of, the whole COVID pandemic has changed the way economies look at themselves and the world. Do you think there is scope for collaboration like you are suggesting for financial stability?
Yeah. Or better coordination in terms of fiscal and the monetary policy, just to add.
There is scope for, let me put it on a wider range, then I'll come down to the specific question that you mentioned. So, for example, for a long, long time, world commerce, basically was on one settlement system, which was SWIFT, which did yeoman service all these years, and a single currency which was settling all transactions, which also was required because at that time nothing else existed. Now, the challenges of the last 3.5 years have again brought up a question as to are there alternatives that could coexist with the systems that are prevalent. And these are what are being explored at various levels. They are being explored at G20 level, they are being explored at regional blocks, and so on and so forth. So to me, this is all part of the dialogue going forward as to, in terms of, let us say, the financial architecture of doing business. What changes are there? To me, they are visible. So, for example, the visibility also comes, not that people started working because they saw the problem just now. People started working because technology evolved. So, for example, the domestic settlement systems that are there in say some of the developing countries, I would say leading with India, the UPI and is today a global settlement system. So it can benchmark with the best settlement system there. It is much more modern, it is nimbler, swifter, and so on. A. B. The issue of what currency to settle. We are already listening, hearing thoughts about settlement, bilateral settlements in your own currencies, and then going on to settlement in overall context using some other currency or some other standard. These are in an evolutionary stage, but I think these will now gather shape as we go along, because this 3.5 years has clearly shown that that is a key part of this one. Your other question, which is specific, is greater coordination in monetary and fiscal policy. I would think it is going to be limited, because if you see the last, again, 3.5 years, that has not happened. And I don't see it happening post things are settling down. So if you look at the way Europe handled monetary policy and the USA handled monetary policy, they handled it differently. And,
Yes.
I admire the leaders for taking their own steps now. Who is right, who is not right? I think time will tell did somebody take a decision at the right time or not. But the point is that they have not acted in concert. And I think it's going to be very difficult to act in concert in this context. So there, I think, is going to be there will be a need to not there will be a need, but as an outcome and as part of the G20 and I would say inter-country deliberation process, newer mechanisms that will come in which you can cooperate, in which you can trade, in which you can settle, and so on. And it may not be a junking of the past all of a sudden, but it will be a gradual process. That I'm sure. A gradual process is going to happen. There is also this process of at the very beginning we saw where does the nation hold its reserves. These are also going to be part of the same process. How do you? We used to use the word how do you deploy your treasury? So nations will have to think how do we deploy our treasury so that we don't become in a way innocent bystanders who are impacted by something happening in a global context. And while securing our interests, we are securing our interests, but we get hit by something that is not our making. So I think there are a whole lot of questions that are going to come up, have come up, and I'm sure policymakers and the leaders will address this. But to me, it's like rewriting history after 100 years, or a textbook, not history. A textbook which was a little bit historic, an economic textbook, and rewriting it now with a look forward theme, as it were.
So a refreshing of an economic textbook for the modern times is what you're saying. Mr. Kamath, there's the other issue which is very important of financial inclusion in countries like India and many others which are part of G20. Do you think India can play a leading role in sort of spreading the word about how important financial inclusion is, given its impact all around the world?
See, again, this is happened in a dramatic way in the last few years. Some time back, if you go back 15 years, we could not include everybody in the financial, carry them along as part of the financial process, savings or investment. We could not do that because we could not reach that customer. The customer was remote, 600,000 villages, and the customer is embedded there. You do not have 600,000 branches and so on. But COVID worked a miracle, and technology worked a miracle. So both came together, and we have an architecture now which reaches the remotest village. And so the person in the village now understands that he has a way and a means to get money in virtually, and then deploy it virtually. Of course, the seeds of this or the foundation of this was laid down with the Jan Dhan scheme. that was, I would think, a miraculous scheme that was put in place
That's right.
for the good of and inclusion of the people. And from there, it has got another, I would say, boost post UPI and so the India stack. You can put all these things into something called the India stack, which several thought leaders talk about, which certainly can be put into that stack. I think becomes an inclusive model for not only India and the world. I think the India inclusive model is already being rolled out. I think this is where you see two things happen. One is you've got the large banks, you've got some of the non-bank finance players, then you've got this 10,000 or so fintech startups. Now, they are at various stages of rollout, various products, but if you look at them deeply, they're all highly innovative, totally modern and so on. So you have, I would say financial services intermediaries with various vintage providing various services. And I'm sure the regulators are looking at all sets of players with deep interest and will provide a path for everyone to serve the inclusion agenda that India has got. So the India agenda will be met. Now, interestingly, this development in India also provides us a global opportunity. That is, Indian enterprises which have, in a way, learned the process of inclusion, and either the whole bit or bits and parts of it. Everybody has got, as I say, as I put it, a business case to go abroad and take it across. So, for example, I would think entire African continent would be a good place to start with. I would think large parts of Europe would be a good place to take these products. Parts of South America could be a good place to take these products. So I'm sure that as part of this G20 process, what would have now G20 process, what would have happened is India has been showcased. And I can say this, that the showcasing that has been done of India by having various G20 subgroups meet in India, I have not seen anywhere else. I have attended at least one or two G20 summits elsewhere. But this sort of showcasing in a well thought out manner wasn't done. So at the minimum, now there is a better understanding of what India can do because we have in a way demonstrated that to this. So to me, that then is followed. What follows then is a business opportunity. So there is inclusion and a business opportunity to serve through inclusion globally.
Mr. Kamath, just one question on this monetary and this fiscal coordination. The U.S. national debt is expected or projected to cross 100% of GDP in the next 1 and 2 years, and a lot of people are fearing another round of QE. Should G20 deliberate, discuss on this issue?
I think it's a delicate issue because if it is discussed at any forum, you could have somebody turn around and say that this is an internal matter and we will manage our economy ourselves. And the way we are done, and we have got enormous experience in this. So I would think that rather than somebody telling another country what to do, they would see what is happening around and take steps to fix it. But it is not just one country. This problem now is going to be there in several countries because national debt could have been built up in a variety of ways. Some do it, openly, like what you mentioned just now. Some do it by having borrowings through state enterprises, which fund development, but there's no deficit in the budget. And finally, after 10, 15, 20 years, when it cannot be paid back, you have a crisis in a way, which needs to be again doused with more water. So I would think that there are very interesting outcomes that we will see as we go along. But honestly, they will be all to the good because there will be greater discipline in the system coming out of the last 3 years. This is not, I would think, something that the G20 would deliberate on, but I would think the events of the last 3.5 years would require countries to look at and address these in a much more granular way than in the past.
Mr. Kamath, you have been the leader of BRICS Bank. You've led a multilateral institution of that level. What is the way you think G20 can look at reforming some of the multilateral institutions currently, like the World Bank and IMF and the like? What are the key areas of reform you think G20 can play a part in pushing through?
Yeah, I think that's a big part of the agenda. And I'm sure you know that there's a committee under the chairmanship of Mr. N.K. Singh. He's the co-chair, but he's leading a large part of the work there, which is working on this. And they've had discussions, I would think, with several parties who have a stake in this, starting with the multilateral banks and then coming down to people who would have experienced this and so on. I think there are 2 or 3 areas here which they would look at, or rather, they would look at a very wide range of things in this context. But the key, and I'll go to the key, the final key here is, could you increase the lending pie? Now, the problem with this, the lock that you're trying to open is, that lock has said that, this is what we have put up as capital. We don't want to put much more capital in. And the rating agencies are basically saying that given that amount of capital, this is what you could do in terms of lending. And very quickly they will reach various points of time, each one reaches their lending cap, as it were. And then the process of raising further capital, which is at times, time takes time, and then getting alignment and so on. It's a rather slow process of raising capital happens. So this, I think, is going to be a key part of process of and to make available a much larger slice of capital to of money that could be lent to the borrowing world, the developing world. There are solutions here, and these solutions now, I think, the G20 leadership group under Mr. N.K. Singh has, they have, I think, articulated this pretty clearly after understanding the challenge from various people. So, for example, from my own experience, multilateral institutions work under the self-imposed, very strict guidelines, which in a way are, the guardrails are put by the credit rating agencies. And the purpose is that your AAA should be inviolate. Now, the point is that multilateral institutions are a large set of, they borrow very large amounts of money globally. They're probably one of the largest borrowers, and provide that counterparty, and are the counterparty to people who need to hold long-dated debt. So they do, they provide that counterparty. So, frankly, there is no way that that demand from multilateral institutions for debt can be replaced. So now we did, a very interesting exercise when we were at, because our rating was not a AAA. Our rating was a AA plus, for a simple matter that you did not have any parent who had a AAA. So our weighted average rating was probably just about BBB or BBB minus, something like that, depending on what time of year, which year you are looking at it. But our rating was AA plus. So you now see the benefit of members of the South coming together and standing shoulder and shoulder, and their rating, let's say, is BBB. But when they go to market and they get rated, it's AA plus. So of course there were certain guardrails that were put in and so on. So we did and so what was the difference in cost that we were paying? It was hardly 15 to 25 basis points in terms of cost. Can be easily shaved out of operating expenses, very easy. I won't go into that whole bit of operating expenses, that could be very easily shaved. Now, we said, we did a hypothetical calculation, and later on others have done this hypothetical calculation. If instead of a AAA, the global set of multilateral institutions which are today AAA, say we voluntarily will operate at AA or AA plus. Now, how much more leverage will the rating agencies provide and so on? So a rough analysis shows that virtually your lending amount can be doubled by dropping from a AAA to AA, and so that some conditions get relaxed. You do not have to operate within, say, X times your capital, you can go to X plus or 1.5X or something like that. So our number work showed that your lendable amount that you raise can be doubled with no increase in equity capital that you need to raise. Similarly, we said we did the work ourselves, and now some of the multilaterals are now going at it. In banks, there is a type of capital called upper tier one. Upper tier one basically is debt which behaves like equity. There are some conditions attached to that. That gives you a boost also to capital. So there are innovative ways in which you can actually use your existing capital to raise more debt and provide that debt to the developing world where it is needed. And indeed, just now, given all the challenges, you have a green challenge, you have, of course, poverty as a challenge, you have green challenge, and so on. So the lendable corpus without anybody having to put additional capital, I think is in place. And this work, the G20, this Enkesing's committee, the G20 has done. And to me, this will be the laudable service they would do to the larger, I would say, the developing world in a way which has got direct, tangible, and relatable positive benefit.
Mr. Kamath, do you think representation in the board of multinational institution is something which is possible for the global south?
They already have a representation on them because all multilateral institutions, their modeling has been a resident board, and based on your shareholding, you have representation on the board. So these are, in a way, they are executive directors because they are on site.
But do they have power to, let's say, to leadership selection and all?
Let's look at where they come in. I would think that they come in certainly the lending decision they come in. They come in into all policy decisions and all governance decisions. The selection of people would be for policy which they would have laid down. And that policy then were required to use outside agencies to evaluate and so on and so forth. So it's a typical governance process that would be there in any private organization also. The board would lay down the policy, and the executive team would then follow that policy based on it. So I think all the checks and balances that are there in the wider set of players, private players, let's say in this case, are there. And for example, again, how should you have your audit committee work? How should you have your risk committee work? How should risk, to whom should risk report, audit report? Those follow best practices. Now, this is, just to put in context, multilateral agencies are self-governing. So they are not reporting to a regulator as a bank, outside bank would do. But they have, by and large, followed practices which banks, as a central bank would prescribe. And they are also, in a way, guided by what the rating agencies want, particularly the guardrails in lending. So I would think that on that front, I don't think that you can upfront say that there is an issue in terms of this. The other issue that is there, which I think would be probably addressed by the committee, I have not yet gone through the full scope of the report, is the speed of operation. We found that from my earlier experience with the multilateral institution going back 25, 30 years, is that you work very slowly because the process that is laid down requires you to work at that pace in the multiple committee meetings, lead times, and so on and so forth. So just speeding up the process speeds up the aid reaching to the beneficiary and makes your organization also slimmer. So let's say that if you are going to appraise one project in 2 years, that's about 1.5 to 2 years is the speed at which you do. If you can bring it to 6 months, you can work with 1/3 the staff. So that, I think, is what I was saying when I said you can easily shave off 15 bips if you need to, by process improvement at the operations level. But so these are the sort of challenges that are there. But other than that, I don't think The other overriding thing is that you have a high rating. And that high rating is also because of the fact that there is no default at all in the multilateral system. They have managed their processes pretty well. So, again, that raises the issue, why not borrow more? So you have managed your books and your house very well.
Mr. Kamath, in our earlier conversations, you've spoken very eloquently about India's digital super cycle, how we are entering this digital super cycle across the board. And you've just spoken about the digital stack, India's digital stack as well. This brings me to the issue of regulation of AI, for instance, and digital currency, cryptocurrencies. India having, sort of been showcased as a very successful, ecosystem in terms of digital operations. What do you think India can tell the G20, and how do you think that regulatory piece on AI, for instance, can be also pushed through?
There are three things here. One is, the rails on which this runs. So, for example, the rails on which UPI runs, the rails on which Jandan runs, the rails on which we settle, and so on. I think time has told us those are robust. Now, the continuous security improvements and other things will happen on that. So, I would think that is one thing that we can showcase what has been done. From there, you take one step, and I will go into a step which we can, and I think the central bank and the government is taking. That is digital currency. But this is central bank digital currency. In central bank digital currency, I think, is a very interesting and a very doable thing. Now, what speed it needs to be rolled out, I think, is the call that the regulator is taking on that. I think there are, on a trial basis, they have already rolled out, and your bank will tell you, do you want to be part of this process? So clearly, that is something desirable. Then you come to AI. I think AI, to me, is you cannot now wish it back. And in various ways, AI will be used within organizations to improve efficiency and improve customer service. So one thought that is there, which I'm just putting out, is let's take a look at all the regulations that a regulator has to bring out. In this case, let me say it's a financial regulator or a markets regulator. Rightly so, there is a whole set of regulations that come out, circulars that come out, and so on. Now, various people interpret these in various ways. And finally, the regulator takes a view to a due process. Because several people would have taken different views, and there is one view that comes out. Now, at times it is difficult to get this one view. And, you could easily have an AI engine look at all the things that a regulator has done on, say, one regulation. And what is the one view that comes out that the regulator takes, which you as somebody now having to comply proceeds with. I think, to me, this is a revolution, since it cleans up and speeds up the way a response has to be provided by somebody who has to adhere to these in a dramatic way. And this is a closed loop. Here there is nothing outside, there is nobody outside. So what I'm trying to say is there are a whole lot of dangers being talked about, but that is in a different world. In what I would call in a closed loop, closed world, there are a whole lot of solutions that are possible. And I'm sure our regulators will lead with this, across the world, because technology is now become a byword in a country, and they will lead with this. Other negative part of it, what has to be done, I think is going to be a different exercise. I would rather look at the good part of it, which can be ring fence, or it's beyond the sandbox. It is now just has to be ring fence, controlled, and put into operation, which will be. Other threats are real. What you mentioned, their regulation may be required. Using AI for morphing and so on and so forth. That is real, but there is a whole lot of positive things we can do, and we should continue to do that. Last, you mentioned about cryptocurrency. I am aligned to what the governor for Reserve Bank has been saying, that as a banker, I don't see this as an asset. So I have difficulty in understanding how to then look at this. So I would rather not speak on crypto.
Sir, you talked about the central bank digital currency. Now should G20 give priority to this interoperability of digital currencies? I mean,
yeah, ultimately it's not a G20 call; it's a central bank of each institution, each nation call. It is going to happen.
Or setting the minimum standards for how to
I'm sure they're working on it. The central banks are working on it. See, because this becomes one more way in which you are settling in a very seamless way. So to me, this is part of the settlement system, I would say, revamp that I expect to happen. And central bank digital currency will be a key part of this settlement in terms of how you settle, how you hold, and how you transact. So this is part of one continuum. It will happen.
Mr. Kamath, we've discussed a whole gamut of issues here where India can actually be showcased and drive the G20 agenda. Do you see that actually happening over the next few years? Because then the G20 presidency moves on and, there are other countries coming into the picture. Where do you see that, in terms of the continuity of what India is achieving this year? How do you see that playing out over the next several years, for instance?
If we can implement something and it gets accepted and gets rolled out as the presidency ends, that stays. The other things then become probably a lesser priority. So I'm sure governments will work on, out of these, what are the key takeaways and how do we make sure that they are in a way absorbed to the extent possible. Because as the presidency moves on, they may have other priorities and they will run with that ball. So your point is very well taken. The half-life is probably short. The half-life probably is your presidency, and you need to therefore work on what is quickly implementable and then provides greatest good to the mass and proceed.
So we are at the end of our time for this show, Mr. Kamath. We've discussed a whole lot of issues in pertaining to India's G20 presidency, and we do hope that what has been achieved this year is taken forward beyond this year and into many more years going forward. Thank you very much, sir, for speaking to us and sparing your time.